Now, before I start, definitely we need to introduce our speaker for today, CY Saw Chen Yin. Now, he's excellent lead trainer and he's also a chartered market technician chartered holder. He's also a certified master trainer of NLP, and he's also a performance coach with extensive experience in coaching individuals with performance improvement, behavioral change, self-empowerment, and personal breakthroughs. Now, his specialties is in trading system and strategies, trading psychologies, and NLP. So without further ado, I'm going to pass it over to CY. CY, are you ready?
Yeah, sure. Hi, good evening, everyone. How are you doing? I hope that everything is well and fine on your side. So today's topic is about understanding the different types of trading styles. Now, do you know what is your trading style or not? I believe today some of you here may have many years of experience in trading. Some of you have been trading for a couple of years, and some of you are just beginners who are just starting your futures trading journey. So regardless of what background or trading experience you come from, somewhere along the line in your trading journey, I believe you will encounter some challenges and questions like, how do I find a trading style that actually suits me? Does my trading style work or not? Whether my trading style is able to profit from the market or not, correct? So you may have heard or even learned some of the trading styles already, but keep an open mind anyway, because this topic can be very wide and in-depth. So in this webinar, I am not going too deep in so much into the details, but I'm going to share with you from a bigger picture so that you can see different trading styles from different perspectives. And by the end of this session, you are going to understand why finding a trading approach that actually suits you and developing a trading style that actually matches your personality is actually very, very important. All right. So let's get started. Now, of course, this webinar is for educational purposes only, to give you a quick understanding and to widen your horizon and exposure about knowledge in trading. So you still need to study yourself personally in detail and develop the necessary trading strategies and styles that actually suits you. So this is a quick standard disclaimer thing where this presentation is provided for educational purpose only. So I give you a few seconds to look through it. Now, I believe Ting Ting has already introduced me. My name is CY. And today, before I enter into the main topic, I have these three big questions that you need to address when it comes to trading. So you need to ask yourself these questions. Now, type in your answer in the chat box below so that I can know what is your understanding about today's topic, okay? So the first question is that, do you know what is your trading style or not? If you know it very clearly, what is your trading style, you type in yes. And if you are still not sure or do not know what a trading style is, you can type in no in the chat box. Okay, so that in this presentation, I can cater for your needs so that you are able to better understand what is the whole concept trading style is all about. So I see a majority of you are putting no, very minority actually putting yes. So I believe you're in the right place already. And the second question for you is, do you understand each trading methods, their pros and cons or not, especially the current your own current trading method that you're currently using right now? Whether do you understand your trading methods, their pros and their cons or not? If you know it clearly, type in yes. If you are not sure or do not know, you can type in no in the chat box. So I see some of you put yes, some of you put no, a lot put no. So this is why you need to listen to this webinar a little bit more closely, all right? And the last question is that does your trading style actually suits you? I believe that if you answer no for the first two questions, right, of course, most likely the third question you would actually answering no. If you answer yes for the first two questions, most likely this last question, your answer would be generally be yes. But either way, let's go through what I will be covering and sharing with you in this session. So I'm going to share with you four topics. So the first topic would be the understanding your trading style. I will start with the foundation first so that all of you are able to have the same definition and understand the same language. The second topic would be the types of trading approaches and their characteristics. Each and every trading approach, they have their own unique characteristics. So you need to understand their pros and cons as well as their limitations, because when you understand them, you are able to use them to your advantage. The third topic would be on the relationship between the trading strategies and your personality. This is very important because not everyone can use the same strategy. Why? Because of the personality differences and lifestyle differences. I'll explain later on why it is important for you to understand yourself in trading. And lastly, I'm also going to share with you how to choose a trading style that suits you best. When you are able to find a trading style that matches you and suits you best, you are definitely comfortable using it regardless of any market condition with a good confidence. Okay, so are you ready? Now let's begin with the first topic. So here in the first topic, I'm going to share with you some of the terminologies and some of the words that you need to understand first. So when it comes to the word trading style, okay, these two words, the trading style, there is no straightforward and clear definition. Because whenever you read different books, different articles, and even videos, there are no standardized meaning for this word trading style, because there are so many different interpretations, different definitions, as well as usage. So, which is one of the reasons why sometimes when you read books, right, you may have a very difficult time in understanding what is the author or even speaker is actually trying to convey the message. Because sometimes when you see other words together, right, when you read, when you learn about trading, there are some other words like trading approaches, trading methods, trading strategies, and even trading techniques. And you compare all of these words with trading style, you will probably notice that you are unable to differentiate the meaning of these words clearly anymore. Am I right? So if you agree with this, you can type in agree so that I understand this is not just only my difficulty when it comes to learning trading, because all of these words seems to be a little bit confusing at first, especially if you are just beginning in trading. All of them sounds the same, but they are actually very, very different. So what are the difference between them is that, okay, in trading, there are basically two main factors that you need to that affect your trading results. So the first one is actually your trading approach. So these three words together, trading approach, trading methods, or even strategies, these three are considered as a similar category, okay? And these are generally talking about the step-by-step process. What are the things that you do in trading, and how do you decide to enter or even exit the market? Because each and every trading approach has its own characteristics, right? So some approach is perform very good in a trending market, while some approach perform better in a sideways market. So each of them has its own good and bad. And another thing that affect your trading result is you yourself. Okay, so not all traders are the same. You have your own characteristics as well, correct? For example, some traders who trade full-time trading as their career, which is to trade full-time, correct? So they are able to pay attention to the market very, very fully, while other traders and many other traders, especially retail traders like you may have your own career and job. So you may be very busy and don't have the time to closely track and monitor the market closely. So your strategy has to be very, very different from those who trade full-time, correct? So when you add these two factors together, the trading approaches as well as you together, it becomes something which is very, very unique, which is called the trading style. Okay, and it's just like there are different types of fashion styles out there in the market, and you have your own personal preferences. You have your own taste of fashion, some your own way of wearing fashion, right? So you have your own style. So each and every style are uniquely different. So in other words, to put this in simple words, you can use exactly the same technical indicator, you can use exactly the same strategy. However, when it comes to style, ultimately the style would be very, very different because of individual differences, because there is another factor that affects your trading, which is you. Now, let me give you a quick example or an analogy for you to illustrate my point. So here you can see this picture is a pilot school, right? All of them are male, all of them are pilots. So each and every one of them is actually wearing the same uniform. But somehow, although they wear the same uniform, right? Somehow it feels a little bit different, correct? So if you can see any differences or you can detect any differences, you can type in yes in the chat box so that I can know you are able to spot even the minor little differences from this picture alone. So are you able to spot the differences between all of these pilots or not? If you are able to spot the difference, you can type in yes in the chat box. And later on, I'm going to tell you why, even though all of them wearing the same, however, there are still somehow a little bit differences between them. So most of you are able to see the difference, right? So why? Because although all of them are wearing the same uniform, the difference would be the individual differences. It can be the differences in the body build, their height is different, the fittings and cuttings for their uniforms are actually different. Some are loose and some of them are actually fit. Even the individual themselves, the hairstyles are different as well. So there are a lot of factors that makes even the same uniform very, very different. So similarly, when it comes to trading, even though you wish to copy the exact same style from others, it can be very different as well, because you are different also, correct? The result would ultimately will be different because of differences in application. So far, can you follow and understand the concept of trading style or not? If you understand, type in an emoticon or give me an emoticon so that I know that you understand this concept clearly before I move on to the next concept. Can follow and understand the concept of trading style for now? Okay. Now, to put it in simple words, right, when it comes to trading style is something that we can actually describe in adjectives words. So, for example, some of the styles are fast, some of the styles are slow. So, some styles are aggressive, some styles are conservative, some high risk, low risk, some are very, very focused and concentrated, they go in very big. And some styles, they are more conservative and they go a little bit more diversified. So there are, other than this description, right, there are still many other characteristics that you can actually describe about trading styles. So this is the basic foundation about trading styles. So trading styles is more than just trading strategies and approach. Trading styles includes yourself. So both of these factors combined together, it becomes a very, very unique thing, which what we call a style. Okay, so now that you have already understand what trading style is, in this topic, I am going to share with you a few categories of a trading approach and their characteristics so that you can have a wide understanding of what trading is all about. Now, generally speaking, trading approaches can be classified into these three major types or even categories. You will notice some of them are actually overlapping because it is just only the matter of classification and as well as grouping. So nowadays, there are many bombastic names for various and many types of trading strategies and methods, am I right? So there are a lot of fancy and even fanciful words in the market that actually describe a particular trading style, but many of them are actually referring to the same thing for the maybe for the same indicator. It is just only the differences in the name. So why is this important for you to understand this is because when you are able to categorize whichever trading styles that fall into these three categories, it is easier for you to understand the nature of trading as a whole. And it is also easier for you to learn the characteristics of different types of trading approaches. So later, I'm going to go through one by one of these three major types of trading approaches. So before I go into it, let me share with you these two key types of trading first, which I believe you are quite familiarized with it. One of it is day trading, which in other words we call intraday trading. The other one would be called the position trading. So you need to understand the primary differences between these two types of trading first. Now, for day trading, of course, you understand that you are trading within the day only. So which means you buy and sell within the day and you do not carry your positions overnight. So which means at the end of the day, before the market closes, you close all or liquidate all of your positions. So you don't hold any position to the next day. Okay, so this is day trading. And the opposite one would be position trading. So position trading, of course, you definitely will be holding your position overnight. How long you would be holding your position, it will be depending on what kind of strategy that you are using, and also depending on the strength of the particular trend. So you may be holding your position for days, weeks, months, or even years. Okay, so far this is the major differences between day trading and position trading. Now let's get into the real piece of this on the category of trading approaches. So the first category, of course, it will be differentiated by the time horizon. In terms of time horizon, of course, we can differentiate in terms of short term, medium term, as well as long term. And do take note that in terms of time frame, there is no fixed definition, and this is only the general classification for your references only, so that you can get a big picture about what different types of trading approaches. For short term, there are intraday, there are few days, as well as you hold your position up to even 1 week to even 4 weeks. Okay, this is what we call a short term trading. There is no precise definition here as well. For medium term trading, you may hold your position up to months, whereas for long term trading, you may hold your position up to even years. So for short-term trading, of course, intraday trading, we have only one type, which is generally we call day trading or intraday trading. Anything other than intraday, right? We generally would be calling a position trading because you will be holding a position overnight. And for long term, if you were to hold your position for more than 12 months or even years, generally we will call it as investing. Okay, so far can follow? So for example, if you use a medium-term strategy to trade, you would be generally expecting to hold your position for months, right? You do not expect to hold it for only a few days. So this is when you understand your trading time horizon, the things that you expect would be different. So earlier I've mentioned, if you do medium-term strategy, you would be generally expecting you hold a medium-term horizon. You don't hold it for a short-term approach. Okay. Now let's go in one by one to see what are their characteristics for short-term, medium, as well as the long-term time horizon. Now, for short term, let's go into the intraday first. So intraday, each of this trading, I separate it into the methods, what strategies, as well as their characteristics. So for intraday trading, there are two main strategy, which is the scalping, which is happening very fast. So this minute you enter the market, the next minute you are expecting to make a few points and get out of the market already. So this is the scalping, which is very fast. It can be you may be even holding your position in less than 1 minute. And for intraday, you can do daily trend trading also, because you are expecting to trade the small little trend within the particular day only. So with this understanding, how about their characteristics? For intraday, because it is only doing within the day only, right? So the movements, the characteristics is actually very, very fast. It is a split seconds or even minute thing. So you need to be very quick in your thinking, your decision, as well as your execution. You need to be very, very fast. Otherwise, you would be having a very big disadvantage or lose out in intraday trading. And what you need to do, what you need in order to succeed in intraday is that you need to have a very, very high attention span. You need to spend a lot of energy in intraday. And of course, because it is a daily thing, right? So it is a very highly repetitive, and you need to trade a lot during intraday. So for example, if you want to do intraday or even day trading, you definitely need to be a full-time trader. However, whether can you do part-time trading for intraday? Definitely, it would be very, very challenging. Okay, because if you do part-time intraday trading, it can be very, very disadvantage for you, because you are not able to focus on your full-time job and trading at the same time. I believe some of you may have already experienced intraday trading if you are not a full-time trader, correct? Now, the limitations for intraday trading is that there are these three main factors, which is the age factor as well as energy and attention span. Because of age, most of the intraday trader, right, they slowly change their trading approach or their trading methods to hold their position for a few days or even few weeks, because most of the time intraday traders are those young people who would do intraday trading, where their career is actually trading itself. So if your career is other thing other than trading, so it would be advisable for you not to do intraday trading. You can do other type other than intraday trading, which is the position trading. And another limitation for intraday trading, which is you need a large account size in order to make a living from intraday. Because for example, if you use a small account, for example 20,000 ringgit, and you expect to make 5,000 ringgit of monthly net profit or net income, it is actually considered quite really unrealistic. So for intraday trading, there are several limitations to this as well. Besides that, for intraday trading, the survival rate for intraday traders, especially if you're doing it part-time, it is actually very low. So in the next slide, I'm going to share with you what is actually the survival rate of day or intraday traders. So according to the recent research, right, do you know what is the survival rate of a day trader or not? Okay, do you know what is the survival rate of day trader or not? So can you make a quick lucky guess and type in your guess in the chat box, so that I can see whether your guess is accurate or not. So don't be afraid, take a quick lucky guess. What is the survival rate of day traders? Can you give me a percentage on? And this research is actually very interesting. So it actually quite reflect and reveal the truth about what is the survival rate of day traders across many years. So I see some of you put 50%, some 5%, 10%, 30%, and 15%. And of course, it depends on what time horizon are we actually talking about, right? It can be 1 year, 3 years, and 5 years down the road. Now let's look at what is this research paper. What do they actually talk about? What do they find about the survival rate of day traders? Now, of course, when they study how many day traders, right? They take 100%. It begins with 100% first, right? And then we slowly narrow it down to see how many people are actually still surviving in the market. Now, of course, for the first month, they found out that 60% of the traders no longer continue trading already. So which means after doing day trading for 1 month, only 40% of the people continue to trade only, okay? Then 2 years later, 75% of the people has already quit doing intraday trading. So which means it remains 25% of the people continue to trade for 2 years. 3 years later, only 13% of the people left. And then 5 years later, left only 7 people will continue to trade the market. Okay, so simply speaking is that, for example, if there are 1,000 people, 5 years later, only 70 people continue to do intraday trading. And this does not necessarily mean trade every day. And because intraday, there are times, days that you can choose not to trade at all. And lastly, one more result they also find out, which is very interesting, which is, they found out that those traders who continue to trade up to 10 years, right? They have negative track record. So which means all this while they're making losses, yet they still continue to trade the market. Why is that so? I do not know, because it's some form of like a gambler's mentality, right? The more you could not win, the more you would try to prove yourself that you are able to profit or make money from in the market. So this is what the recent study has already found out. So now that you already know what is the survival rate of intraday traders, so now let's move on to the another category of short-term trading, which is a trading where you will be doing a position trading. So this is where you will be holding your position for a few days. So if you hold for a few days, right, your method, of course, would be definitely would be doing a trend trading also. And of course, when you do trend trading for a few days, right, your trend would be slightly bigger than your intraday trend, okay? But definitely it is actually shorter than medium-term trend. So the trend will definitely will be lasting for a few days. And if the trend is very strong, it can last up to even weeks or even months. So unlike intraday trading, these few days, this short-term few days trading, right? The survival rate would be, of course, would be a little bit higher. And many part-time traders, right? However, they are still find this, just to do a few days trade and then close your position. They still find it a little bit challenging in doing this kind of short-term trading also. Why? Because you will still need to have a fast thinking and make your decisions very quickly. Of course, you do not have to be as fast as those intraday traders, because intraday traders, they expect to make a few points and then just get out of the market already. But if you're doing short term of a few days trading, holding a position for a few days, you will still need to read the market and to see what is the strength of your trend. So this is especially true if you have a full-time career and job, and I believe your priority is your full-time job comes first, right? And then trading comes second. So there will be time when your job would be very demanding and busy, where you are expected to, for example, pick up phone calls, go for business meetings, or even clearing up your backlogs. So you don't have much time to pay attention to the market closely as well. So to do a few days trading, you still need a high attention span, high energy, and also you need to do a lot of repetition because you are just holding your position for a few days. Once you close your position, you need to start over again by waiting for the next trend. And the limitations, it would be the same thing as intraday trading as well, because of the age factor, energy consumption, as well as the large, it requires a large trading account in order to make a living to do short-term trading. So it is very natural for most short-term traders to actually switch their style or their strategy over to medium-term and long-term traders. Okay, so I repeat again, it is very, very natural for a lot of intraday as well as these short-term traders. Somehow they will definitely switch their trading approach to medium-term as well as long-term. How about this? Let's look at the short-term in terms of weeks. Of course, your method will be similar, trend trading as well. Of course, you are not going to expect, trade for a long term and then just only expect to make a few points, right? You need to you're actually expecting a bigger trend in terms of trading weeks and even months. So I believe a lot of people can do it. And of course, you will be doing trend trading here. And again, how long you will be holding a position will be depending on the strength as well as how long the trend can last. So it does not, of course, it does not require so much attention and focus on the market every hour. So my personal time horizon is also somewhere between weeks and even months as well. So of course, the challenge for most people in doing trend trading for this time horizon is definitely you may not have the patience to hold your position long enough to capture a bigger trend. Am I right? Because whenever you see some profits that you have in your position, right, you would tend to take profit very quickly to cash in and then wait for the next opportunity. So this is where whenever there is profit, you take profit too soon because you may fear that, if you hold your position too long, you fear that your profits may evaporate and you can't endure the volatility in the market. So in order to do weekly, the hold your position for weeks and even months to capture a very long trend. For example, in the FCPO market, you want to hold a few hundred points in the market. You need to be able to withstand the volatility. You need to have the patience to hold your position. And of course, you definitely need to have the holding power. Now, what holding power here means is that how long you can hold your position without actually selling them off or close your position, because you have the urgency to actually need the money. A lot of the traders, they are unable to do or hold their position for weeks or even months is because they urgently need those money. They are actually trading the money that they can't afford to lose. So which is why many of them go to do very, very short-term trading, intraday trading especially. So as you also can see that the survival rate of being an intraday trader is actually very, very low. And of course, there are some limitations in terms of holding a position for weeks and even months. And of course, the limitation is no longer so much of age factor or even energy, because all you need to do to hold for a longer term trend is actually, at the end of the day or during the day, you just only monitor the market once or twice to see whether your position is in the correct trend or not. And of course, you don't need to have so much of a too large of a big account, but you definitely need to have sufficient money in your futures trading account to withstand the market volatility. So simply speaking is that, to put it in simple words, the shorter the time horizon, those trading approach is just like running 100 meters sprint race. It is very fast. The speed is very lightning fast. And of course, it is actually very, very age limited. Young people can do it. You can see that in Olympics, a lot of those sprint runners, 100 meters runners, right? Most of them are actually considerably very young, below 30 or even below age 35. You hardly see above age 35 100 meters runner, right? So as you age and you mature, you are unable to do 100-meter race anymore. So eventually you would need to switch your time horizon to medium as well as holding a position even longer. While for a longer term time horizon, weeks, holding a positions for weeks to even months, is like running a marathon. So it's like during a marathon race, right? For those of you who might run marathon before or even see marathon pictures, you can see that there are even age 50 plus years old or 60 years old person during doing their marathon running, and sometimes these senior people, their stamina can even be better than the young ones. Am I right? So here you can see that, if you are holding your position or doing a slightly longer term, medium term trading, your survival rate would be generally be higher, and regardless of any age that you're currently today right now, you can definitely hold your positions for weeks and even months, provided that you have sufficient money in your trading account to withstand the volatility. Okay. Now, the second type of trading method is actually by analysis. This one I can go through with you a little bit faster because I believe you are quite familiar with this already. There are generally 4 different types of analysis, which is technical analysis, fundamental analysis, quantitative, as well as sentiment analysis. And each and every type of this analysis, it has its own strategy as well as the own characteristics. So for those who do fundamental analysis, they may not use the strategy of technical analysis. So it is okay to have differences in strategy. The most important thing is that you need to be comfortable with it. So let's go through all of these analysis one by one briefly. So I believe all of you are quite familiar with technical analysis, right? So which includes looking at those basic technical analysis tools, trend line, support and resistance line. There are chart patterns, price patterns, using indicators, and as well as the different types of strategies like trend strategies, mean reversion strategies, breakout strategies, and even momentum strategies. So let's have a quick look at those, those chart pattern type of strategy. This is, chart pattern is actually a very, very classical and old style of technical analysis. Of course, even to date, it is still widely used and it's still quite applicable in today's market. And another one would be using candlestick. And of course, when you learn trading, right, there are a lot of, bombastic words for candlestick, which is like, some people call it price pattern, some people call price action analysis. In fact, it is still the same as candlestick patterns strategy. All of them referring to the same thing. And another one would be indicator-based strategies. So here are a general, a few list of indicators. For example, you can see from it is an arrangement from A to Z. So of course, different indicators also can be classified into different types, like trend type indicators, volume type, momentum indicators as well. So so if you were to use technical analysis, there are a lot of things for you to learn as well. How about fundamental analysis? So if you use fundamental analysis, you will be actually looking at macroeconomic data, like looking at the interest rate, inflation rate, GDP, import and export of your FCPO, and what is the government spending, as well as the government monetary policies as well. So you will also look at industry news for your fundamental analysis and many other fundamental factors. And the third one would be on sentiment analysis, where you can actually also use fundamental analysis to do your sentiment analysis. And another type of sentiment analysis is actually reading news and analyzing the language used in those news, whether the news is positive or generally negative. So this is a brief about sentiment analysis. And the last type of analysis is on quantitative analysis. So as the name implies, quantitative, it is about using math and statistics. So of course, when you use math and statistics, you can actually convert those fundamental data to do your quantitative analysis. And trading data like price and volume can all be also used as quantitative analysis by turning it into technical analysis as well. So simply speaking, trading, all of these trading methods and inverse system, they have their own downtime period, because downtime means is that there will a period that it does not actually function properly, or there will be a time where you're actually making losses because of the structure of the market does not fit your trading strategies. So trading is like any other professions and even career. It has its own downtime, which is losses. So for example, other careers like a professional salesperson, their downtime is actually facing rejections. A customer service professional, their downtime is actually facing customer complaints. Businessman downtime is actually facing competitions and other issues. So how about a trader's downtime for you? A trader's downtime is actually facing losses, very simple, right? And why is that so? Because there will be a time your trading strategy does not work well because of the market structure, the market environment has changed. So for example, if you are currently using a trend trading strategy, and it definitely works fantastic in a trending market environment, but it definitely performs poorly during a sideways volatile market. So which is why you need to be able to acknowledge your trading approaches, their own strengths, their own weaknesses, as well as limitations. And most importantly, you also need to deal with it emotionally as well as psychologically, and move on to your next trade. So a lot of people, they don't understand their characteristics of their own trading approach, and they are also unable to deal with it emotionally. So which is why you can see a lot of traders, they trade for many years, however they are still somehow stuck in trading and unable to make good progress in their trading. So it is important for you to understand your trading approach in detail, know their strengths and weaknesses, and deal with it. Okay, so now that you have already known a wide range of trading approach and their characteristics through different types of categories, you'll also need to know how your personality plays an important role in determining your trading results over the long run. As I've shared with you this earlier, this diagram, there are two main factors that forms your trading style. One is your trading approach, and another one is actually you. So number one, you need to understand your trading approach first, and you also need to understand your personality. Many of the people, they just copy and duplicate other people's trading approach without looking at their own personality. So which is why it can be sometimes a little bit dangerous when it comes to trading, because it does not have a good match. The strategy does not match your personality. Sometimes you may get bored with the trading strategy, and then you start to not following your trading rules anymore. Now, when it comes to trading style, you need to explore and find the right match between you and your trading style, so that both of them, your trading approach and you, can work together harmoniously. Okay. Now, on trading approach, these are the general factors about trading approach that you need to understand about. Okay, for example, your time horizon, you need to know very well whether your trading approach is actually trading short term, medium term, or actually long term. Whether does your trading approach requires a fast thinking or slow thinking. Do you need to make your trading decision fast, or you can take your time to make your trading decision? Whether your trading strategy is flexible or very rigid. Is the trading strategy aggressive or conservative? If it is very aggressive, it definitely does not suit for if you are a conservative person, correct? And you also need to know what are the advantages and disadvantages, the pros and cons of your trading approach and their limitations. And on the trading personality, you need to know your personality as well. So what does personality simply means is that everything that is related about you, your age, your time availability in terms of trading, what is your current career, whether you have the necessary free time to do your trading by monitoring the market closely or not, whether you are a conservative person or an aggressive person, whether you are very careful and cautious, or whether you want to something thrill seeking, you are risk seeking trader where you want to trade big and trade fast. So all of these things you need to take into consideration to see what is your personality and whether it can match your trading strategy or not. So later on, I'm going to give you a quick example for you to run through to see how does it actually works between your personality as well as your trading strategy. Now let's go through a quick example on the compatibility of your trading approach or your trading strategy and you. So you includes your own personality lah. All right, and let's compare between these two and to see whether there is compatibility or not. Okay, later on you can type in your question to see whether you understand this concept correctly. So let's say if you are using a very short-term trading, or for example day trading, and your lifestyle, you have a full-time career already and you are actually very, very busy at work. Now, my question to you is whether this compatibility, is it a match or a mismatch? Take a time to think about it, whether this style, is it a match or a mismatch? You can type in match or mismatch in the chat box to see whether this approach works for you or not. So I believe some of you may be actually currently practicing this kind of approach where you do day trading, but while at the same time you are very busy at work. So here, of course, a lot of you, in fact, yeah, all of you are correct. You identify it very clearly. Even you don't have to put your real money into the market. You already can see that this is definitely a mismatch between your strategy and you. Now let's go through another example. If your trading strategy is very aggressive, and however you are a conservative person, so is this a match or a mismatch for this trading style? So give it a thought whether is it a match or a mismatch. So again, I see a lot of you put mismatch also. That's correct, because you can see that even though you are able to duplicate other people's strategy, right? The strategy makes a very big bang of money, can be very fast, can be very aggressive, but you yourself can be a very conservative person. A fast strategy is you may be very uncomfortable with it. So it's like if you are conservative, it's like a conservative person driving at 160 kilometers per hour in the highway. So definitely this is a very mismatched thing. So ultimately you will not following your own trading strategy. Another one, a trading strategy that is fast, but you are a person who actually need to take time for you to think slowly, to process things slowly. You take some time to make your decision, to have to sleep, maybe to sleep through in order to make a decision. So of course, I believe you may be able to know what is the answer here already. This is also a mismatch, because your personality does not fit your trading strategy, you can still use this strategy. However, it is very uncomfortable and very uneasy to use this strategy. Another one, if your trading strategy needs a very high focus and attention span, but you just don't have so much time to monitor the market. So of course, this scenario is definitely the same as the first example. This is also a mismatch in it. So looking at all of these example, already you can actually after this webinar, you can actually look at your own trading strategy and also look at your own personality, your work, as well as your lifestyle, whether what you are currently doing match your trading strategy or not. So if it is a mismatch, you need to start adjust your trading strategies to match you. Okay, not you match your trading strategy, because you may have your own full-time work already. So it is a little bit difficult to try to adjust your work to the trading strategies, but it would be easier for you to adjust your trading strategies to match your current lifestyle. Okay. So simply speaking, match and mismatch. So mismatch is like trying to force it into that particular shape, and matching would be, I believe, this toy you may have been see this toy already, to find the to match the right shape into the correct block. So what happens if you have a mismatch in your trading is that definitely you will be feeling very discomfort in your trading. You feel it's like taking very high risk, very aggressive, very high stress. You are very uncomfortable in holding that particular position, and because of that, you will need to keep switching positions in and out, which is why it costs you very much in terms of transaction cost, and you can also miss out a lot of opportunity because your personality just doesn't match the trading strategy. So regardless of whatever result that you get from trading, right, if it is a mismatch, whether is it good result, making money or lose the money, if it is a mismatch, you will definitely most of the time feel frustrated over it. However, if you are able to have a matching between your trading approach and your personality, of course you will be trading with ease, with comfortable, and to you it will be actually the risk is actually naturally comes down already, lesser stress for you to trade, and definitely you would have satisfaction over the results as long as you make money, depending on the strategy, because you know that how well your strategy is going to perform, your pros and cons of your personal strategy. Okay, so hopefully you are able to understand this concept about your personality as well as the trading strategy. So lastly, before we going to end the last topic, so now that you have already understand the importance between your trading approach and your personality, so that's where you are able to discover your own personal trading styles that suits you best, and you are comfortable using it regardless of any market conditions with good confidence. Now, to understand your trading approach and your personality and see whether there's a match or mismatch or not, you can actually follow this general process flow. So firstly, on your trading approach, you need to learn it, and then you need to be able to understand it very well. So you can learn it through books, through videos, through webinars, or you attend courses, seminars. Take your time to learn it, and most importantly, after you learn it, you need to understand it very in-depth and detailed. Okay, don't just only scratch around the surface and then trying to learn too many things, because learning a lot of things is nice, but if you're just staying at the surface level, it is not going to help you much in trading over the long run. It would be better for you to be able to understand a few things in detail in order to do your trade. So understanding your trading approach also means that you need to understand your personality first before you use it. So earlier that example to find whether there is a match or mismatch between the strategy as well as your personality, already you can see if there is a mismatch in strategy, you don't use it. If there is a match in your strategy, at least you can have a peace of mind and comfortable using it. Am I right? So I repeat again, if you find that a strategy and your personality, there is a mismatch, you can actually stop using it and don't use it at all, okay? If there is matching, then you can use it comfortably. And of course, when you use it along the way, you need to experience your trading performance, correct? And to see when will your trading approach works and when does your trading approach does not work, whether you're comfortable with the profit as well as the loss or not. So as you experience it, you need to look back and see whether you are comfortable with it or not, whether does it affect your lifestyle, whether does it cause you a lot of stress or affect your stability of your emotions, that may actually ultimately affect your mood in your career, which is something that you do not want to get into, correct? So you can take a snapshot or screenshot this process flow to find a matching trading style that actually suits your personality best. And how long do you actually need to do this is that it takes time for you to learn, it takes time for you to understand. And of course, when you use those trading approach or even strategy, it takes time for you to see whether it fits you or not, whether it match you or not, okay? And because trading, it is a process of it is not just only intellectual. Trading is also what we call an experiential process thing. So you need to intellectually, you need to understand it, you need to know it clearly, and then you use it and experience it to see whether it fits you or not. If it is something that fits you and it works pretty well for you, so you continue to do what works. And if something doesn't work, give it some time to see whether it works or not. If it really does not work anymore, move it to something else to find other trading approach that match you personally, okay? Now, before we end, there are 5 important personal factors that affect your trading style. Of course, there are even more personal factors, but these are the 5 key personal factors that can directly affect your trading style. The first one, of course, is your trading objective and your trading goals. I believe many of you comes into the trading environment with different kinds of goals, right? Some of you trade because you want to build your personal retirement fund. Some of you want to build fund for your child education. Some of you would want to build wealth. And you also need to know when do you need to reach this particular goal. So if this goal is like, if you need the money for your child education, for example, in next 1 or 2 years, then it is better for you not to do or take aggressive approach in your trading. You need to start to switch to a conservative approach in your trading, okay? Another factor that you need to consider is your career development. Now, of course, what I mean by career development is not to say that you have to transform your career into becoming a full-time trader. No, you need to see whether your current career, whether you have the necessary time for you to trade or even monitor the market or not. How are you going to build and accumulate your wealth through your current career? And because a different career, your salary, your income, your payouts are actually very different. So wealth building through the stock market or futures market is actually one of many ways only, okay? There are still a lot of ways to accumulate as well as build your wealth. The third factor, which is your personal finance, you need to look at what is your current financial status. If you have a lot of high loans, high borrowing, or even high personal commitments for yourself and family, then it would be better for you to go a little bit more conservative in terms of trading and don't go too aggressive. So personal finance also includes, looking at how much you save and how much you are able to, how much you spend. Because if you are able to save more from your income, then definitely you have more capacity to be able to take a little bit more risk in your trading. However, if your saving rate is actually very, very low, then you are unable to take too much risk in your trading. Personality, I have already mentioned earlier. You need to look at your own personality. What is your core personality? Are you an aggressive person or conservative person? Is your normal behavior of do you need to take time to think things through, or are you a fast thinker? So this is where when you include all of these factors into your looking at your personal factors, then this is where you will be able to find what style actually suits you. And lastly, which is your lifestyle and your age. So for example, do you have the time to monitor the market all day? And what is your age? Because regardless of your age, if you are already senior, then definitely you would want to switch to a trading strategy that is actually more relaxing and not so stressful, so that you are able to enjoy your leisure time. Okay, so that's it for today. Let me recap the 4 takeaways for you. So number 1, your trading style is actually your trading approach plus your trading personality that ultimately forms your trading style. Each and every person's trading style is actually very, very different. Secondly, I've also shared with you the different types of trading strategies and their characteristics. So the most important thing about finding a good trading style is that it has to be a matching trading style. If there is a mismatch, definitely you would feel stressful and discomfort in trading. And if there is a good match, you would trade comfortably with a good satisfaction of the performance. And lastly, also do consider look at your personal factors as well, and to see whether there is a good match in your trading approach or your trading strategy or not. So when there is a good match, definitely you can actually trade with a good confidence. Okay, so that's all for my sharing for today. Hopefully you are able to see and understand the trading style as well as the relationship between your trading approach as well as your personality.